Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we are talking about how I very quickly can tell if an investment is going to work out and the initial process I go through to look at an investment or a stock idea. I'm going to go through that whole initial thing. We're not going to dive super deep as far as looking at this detail, that detail. That's something for later on down the road. This is just kind of knowing, is this a possibility? Is this something I might invest in or not? So I'm going to take you through the entire initial process I go through. And this makes it so quick to look at an investment. Okay, so the first thing I look at, the first thing out of everything is you need a spark. You need an idea. You need to either see a product at a store or see something online or use a new service, something that sparked this idea, right? So you see a new energy drink at the store and you see two guys grabbing that energy drink and you're like, dang, that energy drink, I never heard of that. I need to look that up. So first thing you do, you need to go on Google. You need to look and see if that's even a public company. Okay, it's a public company. Awesome. So that means if it's a public company, you can invest in it. There are shares you can buy as an individual investor. If it's not a public company, then you can't invest in it unless you know the owner and they want to sell you a stake or something like that in the company. So, awesome. We found this energy drink. And it's a public company. We never heard of it before. It must be growing. These people are buying it. Let's look into it. Okay, great. First thing we're going to do is we're going to look at the business first. So there's two things you could look at. You could look at the financials of the business and all those kinds of things first, or you can look at the business first. I always look at the business first. It is extremely important. The reason being is you want to fall in love with the business first, because many bad decisions have been made when somebody looks at the financials first and falls in love with the financials, and then they don't really think about the business and how's that business going to trend over time and those sorts of things. So the first thing I would do, I'm looking at this energy drink. I'm searching Google. I'm searching for as much information on it. I'm going on Yahoo Finance. I'm typing in the Google symbol. I'm looking at all the recent news about that company, about the products and whatnot. I'm going to read through the 10Ks. The 10Ks are an annual report that you can find on the Investor Relations tab on that website. I'm going to read all through that about the company, this thing, they got distribution here, they just came out with this new product, this new drink, etc., etc. I'm going to read all about that business. Once I've read all about that business, now I'm going to start having an understanding of their business. And now I'm going to get a feeling of, you know what, this business is growing. You know what, the energy drink category, I'm going to look that up online. How did that grow last year? Oh, it grew 25% over the previous year. So they're in a category that's growing. And they're a newer company that is growing along with it, and they're growing above the category. So I'm going to look at all those types of things. And now I'm going to kind of get a feeling, you know what, I like this company. I like it a lot. Now we can move on to the next step. The next step at this point is now going ahead and looking at the financials. What financials do I look at first? First things first, you're looking at the balance sheet. Why the balance sheet? Because the balance sheet is what allows a company, if they ever stumble and they have trouble, to stay afloat. A company with a really poor balance sheet, if they ever falter financially, they're going out of business. Or they're going to have to take out some crazy loans at some crazy interest rates and then be paying that back forever and never be able to make a profit because they're just trying to pay off that loan. Those kinds of things. So the balance sheet's first. What I'm looking at on the balance sheet, how much cash do they have on hand? Cash and cash equivalents. I'm looking at that line category. I'm looking at their short-term investments. I'm looking at their long-term investments. I'm adding those three together. I'm getting a number. Then I'm looking at how much short-term debt do they have, how much long-term debt do they have. I'm subtracting the cash and cash equivalents minus the short and long-term debt, and I'm getting a number. If the cash and all that stuff in the investments is a 2-to-1 ratio or better over the debt, that makes me feel very comfortable. If it's a 3-to-1, 4-to-1, 5-to-1, then we're really talking. Because that company has way more cash than what they know what to do with, and they don't have a lot of debt, so there's not a lot of risk as far as, oh my gosh, the company could go bankrupt if something happens or a lawsuit happens or something like that. That takes a lot of the risk out of it. So they had a great balance sheet. They had 10 billion in cash and cash equivalents, minus 6 billion in, or not 6 billion, minus 600 million in debt. So it was over a 10-to-1 ratio. That's awesome. That's a phenomenal balance sheet. So let's move on to the next step now. What do we look at next? The income statement. The income statement's next. What I'm looking for at the income statement, I want to look at the last 3 years specifically, the last 3 years, and I want to see how's revenue moving, how's profits moving. If revenue or profits stumbled for some reason, that doesn't mean it's out of the question. That doesn't mean we don't pay attention to that company. I would love it if, revenue was 1 billion this year and then 1.5 billion the next year and then 2 billion last year. That would be beautiful, and that's ideal, but that's not always the case. And if it's a little stumble here or there, that doesn't mean it's a throwout. Then it just means you need to research even more. Why did that happen? Why did they have that hiccup? Did they have a product recall? Something like that. And I pay attention to profits actually a little more than revenue. I give profits a little preference over revenue, and the reason being is in a lot of businesses, sometimes they will sacrifice profits for revenue's sake, so they can keep that profit, and I don't like that. I don't like when profits eroding. When profits eroding, I usually don't like that. But it's not for all situations. Sometimes a company can mess up on a product one year, or have a recall or something, and they lose a lot of money one year, and then the next year they have these great products come out, and it pushes them to a trajectory that's just way up. So, like I said, it's not always a throwout. That just means you need to do more research at that point. But let's say the income statement's great as well. This company, everything's moving up, revenues are moving up, profits are moving up, great growth. So they had a great balance. I love the business, first off. They had a great balance sheet. They have a great income statement. What's next? Now we're going to look at the PE ratio. I like PE ratios under 17. Unless it's a fast-growing company. If it's a fast-growing company, and it's growing 30-40% a year for the last few years, and maybe it's trading at a 25 or a 30 PE, at that point, it may be worth investing in still. So, the PE doesn't always have to be under 17 if it's a fast-growing company. Now, there's a certain PE that I will not go to even if it's a fast-growing company. Anything that's really above 50 PE, I almost never touch it. It would be so rare for me to invest in a company with a PE over 50, even if it's growing super fast. So the PE ratio is very, very important. So we looked at the business. We liked it. We looked at the balance sheet. We liked it. We looked at the income statement. We liked it. Then we looked at the PE and it was under 17. Phenomenal. At this point in time, this is a company now I'm going to start keeping track of. And this is a company that now deserves a dig deep. In the dig deep, we are looking for everything. We're reading every single thing possible about that company, recent news, everything. And then we're just digging super deep for everything we can. We're listening to conference calls. We're doing everything because now that investment's shown me the potential that now it's worth going into all those extra steps. And then once you get all those extra steps, you listen to conference calls, you do all that kind of stuff, and you still love the company at that point, then it's ready to make an investment in. Then it's ready to make an investment in awesome stuff. So that's the process I go through. All those steps I talked about, the 4 main steps, you're looking at the company, you're looking at the balance sheet, income statement, you're looking at the PE. You can pound out all 4 of those. I don't know why I put up 3 fingers. All 4 of those steps, you can do them in, I would say, an hour and a half, maybe 2 hours. And that's a good amount of time because there's certain companies, obviously, products and whatnot, that you would never even invest in because you're like, oh, I don't see any growth in that. So it's not even worth going to step 1 on. So the few companies you have ideas about, you can go through that process in an hour and a half, 2 hours max, instead of spending way more time and whatnot. And plus, it's just a way to set you in the right mindset so you can make a successful investment. That's the way I do it. Let me know in the comments section if you guys do the same process or you do something similar to it, or maybe you do something totally different that you think your process is good. I'm always willing to hear ideas. I always love to hear ideas. And if you like this idea, let me know in the comments section or give me a thumbs up or whatnot. I would love to hear some feedback on this. Thank you so much for watching, guys. If you haven't subscribed, you may want to. I talk a ton about personal finance, talk about entrepreneurship. I'm a young entrepreneur. I talk a lot about tips and things like that to help you guys out start a business. And then I also talk about the stock market, investing in stocks and those kinds of things like we did today. Thank you guys and have a great day.